Welcome back to the SprottMoney.com monthly precious metals projection video. I'm your host, Craig Hemke. Joining us again here in June of 2022 is Chris Vermeulen of the technicaltraders.com. Chris, nice to see you.
Hey, glad to be back, Craig.
Boy, what a crazy month May was. I think many of us will look back on it, though, as what a great opportunity to add some precious metal. I mean, silver got under 21, gold got down briefly under 1800, and both have now responded higher. Of course, it's always a great time to add some physical precious metal. And please always keep in mind that the producers of this content are SprottMoney.com. So if you want to thank them for all that they put out on the internet, make sure you visit their site every time you're in the market looking for physical precious metal. SprottMoney.com. You can find all kinds of great deals there, analysis, podcasts like this one. And of course, though, if you'd rather just talk to an individual person, they offer that as well. You can call them up at 888-861-0775. Get some great physical metal. They'll offer you a great deal to store that metal for you as well. Again, just great folks at Sprott Money putting out this content for you. You might also, if you just want to just do one simple thing to help us out, maybe give us a like or a subscribe on whatever channel you like to access this content. So anyway, Chris, it has been a crazy month, and we've got a number of charts to discuss ahead of what will probably be an eventual pivot of these central bankers back toward weakening. Maybe the markets are starting to pick that up. Like I said, gold's about $80 or $90 off its lows. The economic data in the U.S., though, has been pretty dismal. So it looks like we're headed toward kind of a stagflationary recession if we're not there already. Part of the problem that the Fed can't seem to fix with just simply monetary policy is soaring energy costs. Not only is crude oil continuing to go up, but again, each molecule of crude oil can only be cracked once. And at the refinery, they have to decide if they're going to make jet fuel or diesel fuel or gasoline or any of the other distillates. That is causing all sorts of supply shortages. And I urge everyone listening to this to go to SprottMoney.com, read the article that, I wrote a couple of days ago. Chris has got it pulled up here. It's called 50 Basis Points Does Not Fix This. See in the upper right-hand corner there, Chris, where it says Insights. That's where you click to find these articles. I write an article every week. So does David Brady. You can find all of this analysis, but in particular, this one article I want you to read about diesel prices, gasoline prices, and what this may indicate for supply shortages of nearly everything as we go into the summer. So anyway, that as a lead, I just want to draw people's attention to that article. Chris, I'd like you to take a look at the long-term chart of crude oil and tell everybody what you see as here on Friday, June the 3rd, it looks like we are closing in on our highest weekly close in 14 years.
Yeah, well, let's just drop down to the daily chart real quick and get a look at things. I've been talking about this with subscribers for a while here, that I think we kind of saw a blow-off peak here in crude. With that was right when Russia, Ukraine kind of hit. We got the war surge in price, and it's come back down. But I just as you said, I think we're going to see energy prices continue to either move higher or hold up in these lofty ranges for crude and natural gas. I think for quite some time, several months, if not much longer than that. And you can see the daily chart for crude is a series of higher lows, a series of higher highs, and really we just cleared this previous high this week. And it is, as you were mentioning, we'll show the weekly chart. The weekly chart is about to close at the highest level since 2008, which you talked about. And that's a pretty significant sign. So short term, we're still in a very strong uptrend for crude. And when we look at that long-term picture, you and I were talking here just before the show, we go way back to 2008. And you can see here, there was a weekly bar, very small here, but we are just about to break that level. And we're kind of in this phase here where we could see energy prices just explode and have that kind of parabolic blow off phase. It's going to be pretty interesting. And inflation is probably going to be another big problem, I think, going forward for the next 6-8 months in terms of maybe not they're topping, maybe they're still picking up speed to the upside. So,
well, those energy costs are in everything.
Mhm.
If you manufacture things, higher energy costs, you got to pass that along to your consumer. Otherwise, it crushes your margin. You're laying people off. It's a whole spiral that unfortunately we dealt with here in the US 45 years ago in the late 70s. It certainly looks like we're headed down that path again. And again, just to remind everybody, these higher energy costs, we're already paying the highest gasoline prices that we've ever seen, at least here in the US. Average price now like 475 or something, Chris.
Yeah.
Diesel fuel pushing towards 6. Man, you get what would you look at? A breakout above this 115, 120 level, or those highs back in early March? Would that signal a run to those all-time highs? What do you look for?
Yeah, I mean, I think it potentially here is on a breakout. This week could be the breakout week. You could argue that usually an opening price is a very significant price level, also a closing price on these bars. Now, this is the weekly, so both of these are important levels. The fact that we are on the verge of closing at the highest level, we'll be breaking this open price. I mean, we could see crude really just this week, I think, could be that breakout week. We'll see where we close by the end of the day. The day is far from over right now, but if we close above this opening price that we saw back here in March, I think that could spark a big rally and things could really surge and take off. There's a lot of volatility, a lot of energy here, and there's a lot of issues going on around the world that I think could continue to drive crude up. So this is a pretty explosive move. And if we go way back in time, previous high, we were looking way back over here around 147, 148, somewhere in there. When you look at it on the chart that we've had, it is very, very reasonable for it to go up and strike that level. And it could happen in over a 2, 3, 4, 5, 6 week window. It could be very explosive here. So that's what I'm kind of looking at. This week, I think, is a pivotal week for crude oil.
All right. So, Chris, it looks like the Fed has a problem on their hands. Really no amount of what they're about to do in terms of Fed funds rate hikes gets a situation like this under control. And so I wonder if maybe the dollar is picking up on this. It has been rallying like crazy for the last 6 months or so. Got to its own 20-year highs just a couple of weeks ago, but has since pulled back. Again, the dollar can act as either a headwind or a tailwind for the precious metals. What do you see in that long-term dollar index chart?
Yeah, the long-term dollar index, I mean, it's definitely up at a resistance area. It's trying to break out and move above these highs that we've seen. It kind of did a 1 week kind of rally up through there. It looks like it might be a bit of a head fake. It's reversing back down and pulling back. So the big question is, has the dollar topped out? And if the dollar has topped out, that is going to be really bullish, I think, for precious metals. It might also send other commodities higher, but precious metals definitely so, I think, could benefit from the dollar unwinding and moving down. And we just need to see if the US dollar here is going to kind of flag sideways, build a little bit of a base, a formation here, a launch pad for it to start to run up and go even higher. And that's where we're stuck right now, is the precious metals are on the verge of breaking out. They all have shown very strong strength this week. Silver and gold miners, they're all trading at resistance on the daily chart. They've all hit their head. And the question here is, can the precious metals pop and break? And I think a lot of it's going to have to do a little with the dollar here. Is the dollar going to find support here and rally, which would mean metals will pull back? Or is the dollar going to break down and give us a bunch more big red bars, and we're going to see precious metals really take off and start to rally in a big way? So that's kind of the tipping point we're at right now. We're trying to see which way the metals and the dollar are going to go here, because one's at support, the other's at resistance. And it's kind of a wait and see type of play here.
From a technical perspective, Chris, I mean, you've identified that what might be a false breakout above 103 or so, right?
Mm-hmm.
In your mind, what would lead you to think that it is or was a false breakout? To what level would the dollar have to fall to have you go, okay, that was it, the top is in?
Yeah, let's just drop down to the daily chart real quick here. And, at this point, it's still holding up above the 50-day moving average. So this is a very healthy pullback. It's had a very strong run. It's pulled back to the 50-day. The 50-day tends to be a very good long-term trend kind of support level. So if we actually break these lows that we saw about a week ago, I think that could be the sign that we see another flush down that'll bring us down to somewhere 98, 98.50 range, which would be a pretty big unwinding event for the dollar. It would send precious metals pop. They would all pop and rally, I think, very significantly, 5, 10 plus percent. So this is kind of the low I'm looking for here. Like based on our short-term momentum, the US dollar has already turned into a downtrend. It's a very short-term strategy, but it tends to lead the longer-term swing trade, which the swing trade would be if this was to come down to here, that's where we'd be looking at the next level. So this pivot low is where I'm looking at. If this level breaks and we see precious metals break out at the same time, that to me is telling me that, okay, the dollar is broken down, money's flowing into the precious metals. And I think both of those could be played, either the short side on the dollar or long side on metals. Metals definitely has a much more opportunity. The US dollar, a big day for the dollar is 1%. Big day for miners is 8 or 10%. So
yeah.
Yeah.
Well, Chris, it's not just the precious metals that would benefit, from a kind of a secular downtrend in the dollar. Be all commodities. And I understand you've got a chart you want to show us about commodities versus the S&P.
Yeah. So if we take a look at this chart here, this goes back to the early 70s. And what this is the SP5 or the SP 500 global commodity index divided by the SP 500. So it gives us that ratio. And the mean is around 4. And if we take a look at these spikes, so up here, this spike here, this was the oil crisis when back in 73, where we saw oil prices, commodities very highly valued compared to the stock market. Over here, we're looking at the Gulf War and commodities, gold, everything rallied during that point. Then we had the financial crisis. We ended up seeing commodities rally up there. And, for example, down here in 2000, the low level, this was the big tech bubble. Everyone piled into stock markets. Real estate was on fire. And commodities, this line here down here is telling us commodities are undervalued. They're underperforming everything else. And so we're way below that level. Based on this, we're seeing commodities being the cheapest they've ever been compared to the SP 500 ever. On this graph, and that's as far back as we can go. And it's just starting to turn up. So right now it's telling us that every asset or the SP 500 and real estate are way higher valuation than commodities. Commodities are an absolute steal. Even though we've seen crude oil pop and rally, we've seen other commodities move up. In relation to the stock market valuation, commodities are way undervalued. And it's the perfect storm for high commodity prices to continue to rise for potentially 4 or 5 years. There's a major kind of super cycle with commodities coming into play. I've talked about it with gold before. I think we've got, 3, 4, 5 years of potential upside in gold. And we could see the commodity basket as a whole continue to move up. And I mean, that's going to really hurt inflation. There's a lot going on. So this is a pretty important turning point, I think, for commodities. And, everyone right now is so excited about real estate. Everybody thinks they can make quick, easy money. And, I think the easy money has been made, and stocks and real estate are not going to be one of the best investments for several years. I think commodities are going to come back to life. And of course, no one's expecting it. And that's why I think one of the reasons it's going to happen. So,
and Chris, as you point out, those 3 spikes from early 70s, 1991, and again in 2008, those were all driven by crude oil. And crude oil, as we just talked about 5 or 6 minutes ago, is pushing back toward those levels of 2008. So if you took crude oil out of that commodity price here, as an aggregate, oh my God, how far would it be down? It'd be negative something almost,
Yeah, crude is such a heavy weighted, it really moves the commodity index. You take it out, you realize how cheap the average commodity going forward really is. So
yes. And if they just get a simple reversion to that mean that you've drawn there at 4, what would that mean for not only the precious metals, but copper and all the base metals and the grains and everything else? And then what would that mean for the underlying inflation, right?
Oh, it's scary. I mean, we're under 1 right now on the commodity index ratio here, and it's got room to, to rally 300% just to get back to the median. So I mean, there's some pretty big fears. Like people, I don't think people realize how big inflation, how ugly things could really get. And
No.
the world and emotions and sentiment go from one extreme to the other. And I feel like stock prices in 2020, early 2021 hit an all-time extreme. Everyone thought they were geniuses and going to be millionaires, and everyone feels like that in the real estate market. When you peel the onion, the layers back, and look at what's really going on, I mean, sure, those were great times, but I think those times are over, and it's going to be a whole new asset class that comes to life, which are going to be, base commodities, and it could last several years, and stocks might be out of favor for a long time.
And yeah, I think of it in terms of recency bias too, Chris. I mean, there are not a lot of old farts like me around. They remember the late 70s. Now, I mean, I was a pre-teenager. What was I? 1978, I was 12. So it's not like I was paying close attention, but I do remember, with inflation now and all that kind of stuff from almost 5 decades ago, but not a whole lot of people managing money, that sort of thing. Not a lot of people that know that kind of stuff. All they know is falling prices and a rising bond market and all that kind of stuff since 1982. Man, they might be ready for a rude awakening. So with that, let's just get to our last chart.
Sure.
Like I said, gold washed out about 3 weeks ago. First thing on a Monday morning in London trading down to about 1785. It reminded me, see that dip you got there? Go back up just a second. Back there in early August. Yeah, that one. That was a washout on a Sunday night that dropped us down to like 1680.
Yeah.
That low, well, you can see how that led to some consolidation and then a rally. When we got that washout, like I said, about 3 weeks ago, down to 1785, and we're almost $100 up since. So what do you see on this chart? I would imagine you look at that blue line and see that as pretty good resistance. Tell us where you think gold is at this point.
Sure. Yeah. Let's take a look at the Fibonacci extension. I haven't checked this yet, but if we look at this recent pullback and this rally, more or less based on the sell-off, based on this kind of consolidation, the downward momentum was telling us 618 target, and then about the 100% measured move down into this range. We could even adjust that down to this low here. Doesn't matter. But either way, gold has come down and hit kind of it based on the sell-off, the crash it had in the pause. It has hit that 100% measured move. And now we're finding it, it's getting a bounce, it's getting a bid. And if we zoom in here a little bit more, this is a really critical line on the chart. Let me just draw a horizontal line here.
The green line is a 200-day moving average?
Yeah, the 200-day, and the blue is the 50-day. So, it's bullish in terms of long-term trends. The 50-day is above the 200, which is good. Price is above the 200-day. We are stuck with the price right now. It just tagged the 50-day moving average this morning. It's starting to sell down a little bit. There's been a lot of volume, a lot of consolidation through this area here. So there's a bunch of volume for the market to eat through. But we're definitely seeing gold, it's kind of ping-ponging between these two. It's hit its measured move down here. So I feel as though it's just a matter of time. It might chop around for a little bit more, but I really feel like it is about to pop and really start to take off with the next move to the upside. So we really need to see how that's going to unfold over the next week or so, because it could very easily roll over and continue to go down. It really is kind of in no man's land right now. To me, it has to hold above the 50-day, and I really want to start to see it extend higher going forward versus it rolling over here and selling down. So, I mean, we're kind of in that wait and see. And when we go to the monthly chart, since this is the monthly projections report, let's just take a look at the long-term trend. In the grand scheme of things, gold is really just down to this halfway point. We got a lot of little highs through here. If I just pull this line down, you could just kind of drop it into this level. You can see there's a lot of candle wicks that topped out through here. And really, we're just kind of, in the middle of that range. So when you look at it from a big standpoint, it rallied up, it's pulled back into a support level. And to me, I think this is where we're going to find that kind of trend it might take several more months before we see that big breakout in this next big rally. But I do feel like we're somewhere like over here, 2009 area, where we've had kind of a crisis. We had the COVID crisis, and now it's come back up, and it's just kind of chopping around right here. It's almost like this pullback right here. And it's going to take maybe another 4, 5, 6 months to work its way up, and then it's going to pop. And we could see, the precious metals market really take off. So, when we look at the gold chart, everyone wants it to move and wants everything to break, but this is a huge pattern. And if you get stuck on the daily chart, even the weekly chart, you're going to be waiting still a long time, and people get anxious. But when you look at this monthly chart, you're like, okay, we're still like probably 3 months minimum, if not like 6 months away from what I think will be the start of a really big rally. So you need to look at the big picture, step back and calm yourself down, because I know a lot of people are getting worked up with this recent pullback, but in the grand scheme of things, it's a typical big pattern pullback and really hasn't done any damage to the long-term trend at all.
Well, and as you mentioned, that 3 to 6 month timeline, that pretty well jives with the Fed's calendar as well, right? Mm-hmm. They're talking about 50 basis point rate hike when they meet later this month, maybe another one in July, and then we get later into the summer, we'll see.
Yeah.
And if we get another one of those Powell pivots, that would certainly time with what you're talking about there.
Yep.
Well, Chris, that's some fabulous information as usual. And I know everybody has benefited from listening. So again, just ask you on your way out to keep Sprott Money in mind anytime you are in the market for physical precious metal. Always going to find great deals there. And if you want to talk to an actual person, find out more about their services, they're right there at the phones ready to pick up and talk to you at 888-861-0775. Chris Vermeulen, technicaltraders.com. Thank you for your time, my friend. We're going to have a busy month with more inflation data, that FOMC meeting. I look forward to talking to you at the beginning of part of July and see where we are.
Should be interesting. Well, thanks, Craig. Always a pleasure.
It is always a pleasure. And thank you, everyone, for watching. We'll talk to you again in about a month.